Hey folks, welcome back to the Mortgage Farmer. You know, through 33 years of doing mortgages, I've probably helped 1,000 first-time buyers. Now, there's a few things that you can do that will help make the process easier for you as a first-time home buyer. But there are two key ingredients that I believe will set you up towards being ready to buy your first house and limiting that anxiety that you're going to have from buying that first house. This video, we're going to talk about those two things, and we're going to expand a little bit on each of those things. But we'll tell you right now, those two things are preparation and knowledge. We're going to go into great detail about each of those things in this video, and I hope that it will help you learn, grow, and prepare yourself. I often say to people, knowledge is power, and I want to give you knowledge so that you gain the power in the transaction, making it easier, smoother, less anxious for you buying your first house. After all, it's supposed to be fun, not scary. Come with me as we talk about those two things in great detail. So, preparation is the first thing in that two-item list that we talked about, preparation and knowledge. So preparation, being prepared, but also preparing the items that you're going to need to be ready to do that. The first thing, and the one thing that will help you get ready for this, is to know your credit profile. Know your scores. Know what your credit looks like. Go ahead and take advantage of the opportunity that you have as a consumer to pull your credit once per year for free. Go ahead, get your credit report so that you know what's on there. You don't want there to be any surprises. But more importantly, sometimes it takes time either to correct an error on your credit report, or more importantly, to make a more robust credit profile for yourself. You've seen in some of my other videos things that I gave you suggestions about how you can improve your credit, grow your credit, build your credit profile. Those are things that you want to be doing in advance. So get your credit report, look at your credit profile. You want to make sure that you've got 3 trade lines on there. It'd be awesome if they're all 24 months long, but at bare minimum, they each need to be 12 months long. But that's one thing that you can do. Another thing that you can do through this process is take a look at your assets. Go look at your bank account. See what's in there. What's in your savings account? In a previous video, I talked about accessing your 401k as one of the options you've got for coming up with your down payment. Go look at your 401k if you have one. If you don't have a 401k, I suggest that you go and you do that right now. If you've got a job that offers that opportunity for you, you need to be taking advantage of it. The earlier you start building a retirement nest egg, the bigger that nest egg will be when the time comes 30, 35, 40 years down the road. So you definitely want to look at those assets. In addition to looking at your assets, it's time for you to think about what other options you may have in gaining assets. Now, here's what I mean by that. Do you have an immediate family member that has in the past voiced a desire to help you become a homeowner? Maybe it was a grandparent, aunt and uncle, mom, dad, someone that's really close to the family that has shared with you that they have an interest in helping you. Maybe it's time to have a dialogue with them and say, hey, I'm serious about this, and I just wanted to revisit with you the conversation that we had at Christmas 2 years ago, or whenever it was, where you said you might be willing to help. I know that that can be a difficult conversation, but if the person said it, they probably meant it, and it's a great opportunity for you to get from them information about what might be available to you. I'm not saying that you need to go and ask family members to give you money, but if there's been a conversation about it in the past, now's the time to have that dialogue so that you can make a mental checklist accumulating the various assets that might be available to you through this particular process. The last thing you want to do is look at your income. Now, obviously, if you have a job, then you'll know that you've got an income, and we didn't know what that income is. But there's different ways that income might be paid. You might be a salaried employee. You might be getting paid monthly. You might get paid twice a month. You may get paid bi-weekly. By the way, semi-monthly and bi-weekly are not the same. They are very different, but those are things that you want to be prepared for. Also, hourly, well, if we're an hourly employee, that's okay, but we have to document how many hours you're consistently working. The key here for income is to be able to document its stability. So if you're an overtime or a hourly employee, we need to be able to document how that's being paid, how often, what the likelihood is that it will continue. Those are things to pay attention to. So look at your income. Share that information with whoever you're speaking with from a mortgage professional standpoint so that they can help guide you through that process. That's some of the things that you can do to be prepared. You want to know what assets you have available. You want to know what income you have that's available. Here's something that we can talk about in a later video, but there are certain qualifications for counting unique income: overtime, bonuses, commission, shift differential for people like nurses that work in the healthcare industry. All of those things are unique, and we have to be able to document their stability. The way that we typically document their stability is by seeing that it's continued for at least the previous 2 years. Doesn't mean that we can't count it. It's just something that we need to be aware of while we're going through this process in talking about those things. So preparation. Another thing that you can do to be prepared is, in this day of YouTube, and after all, you're watching a YouTube video right now, in this day of YouTube, go watch some videos and try to glean information about what types of products are out there and available. What is a mortgage? What are the typical terms of a mortgage? Those are things that the more information you have, the better. You don't have to be an expert. That's why you're coming to me, because I'm the expert. I'm the individual that's been doing this for 33 years. But the more information you have, like I said, knowledge is power. The more information you have, the better off you will be. So that kind of covers the preparation side of it. The next thing that we're going to talk about, as I mentioned earlier, was the knowledge side. Let's move over here and let's talk about knowledge. So, knowledge. Well, there's no way that you can learn everything about mortgages through a few videos. Trust me, if I could, I would have done it 33 years ago. I'm learning something probably every day that's new to me about the mortgage industry. Now, part of that is because there's always lots of information out there. Another reason is simply because rules change, guidelines change, policies and programs change over time, so we have to continue to learn as we go. But knowledge is a key piece to this equation. Now, what I mean by that is go and meet with a mortgage professional. Hopefully, it's me right here at the Mortgage Farmer, Mortgage Choice, located in Cary. I would love to be that person for you, but most importantly, you want it to be someone that has a breadth and depth of knowledge about the industry. I've been doing this 33 years, and that's not to say that someone at your local bank can't be helpful to you, but someone that is opening checking accounts for a couple of hours and balancing a teller drawer for a couple of hours and then doing car loans and personal loans and mortgages in the afternoon, it may not give you what you deserve. I don't doubt that they have value for their institution, but I would encourage any of you to go to someone that specializes singularly and solely in mortgage lending, in helping be able to impart wisdom on you about that process. Knowledge is key in this. There are so many things. There's no way that one video could begin to teach you everything that I know about mortgages. But as a first-time home buyer, I know that there's some good starting points that we can go to and that we can talk about that will help you be that person that comes in educated and has put the anxiety level at a 1 instead of at a 7 or an 8 through the process, because you understand what's going on. So there's different types of mortgages. There's what we call conventional loans. There's what we call government-backed loans. There's even what we call jumbo loans. Jumbo is just a loan that's a greater size than the others. Conventional loans are the standard everyday loans that about 83% of all individuals obtaining a mortgage obtain. The other 17% would be those government loans, those government-backed loans, or those jumbo loans. So conventional loans make up the overwhelming majority of all the mortgage loans that are done out there. But that doesn't mean that you won't be one of those 17%ers that might take advantage of a government loan program, whether it be a USDA, U.S. Department of Agriculture rural housing loan. I know that sounds like it's only in rural areas, and that isn't completely true. There are areas even right here in the Cary metropolis that do qualify for USDA loans. The reason you would choose that loan is it does do 100% financing. It has income limits. It's very restrictive. You can, it's got to be your first house. There's all sorts of things that we look at there. FHA, from the Federal Housing Administration, overseen by HUD, Housing and Urban Development. They have a great program which is called, technical terms, 203B forward mortgage. Is whenever you hear someone say FHA, that's probably what they're talking about. That program allows you to go in for as little as 3.5% down. That's a program that's an option as well. The Veterans Administration has a VA loan program for veterans. Now, we say veterans, but this is a broader category than one might think. It's veterans and their spouses. It's reservist. It's National Guard. And it could be retired veterans. All of those are opportunities for those that have served in the military in some capacity to take advantage of a VA loan, which, by the way, is also available up to 100% financing. So that's an option. Conventional loans are what the majority of loans are done. Again, I said 83%. It varies from year to year, but it usually rolls somewhere between 79% and 84% of the total mortgage volume is going to be what we call conventional loans. You could do a conventional loan for as little as 3% down. The most popular of the low down payment conventional loans starts at 5% down, but that's a program that's available to you. But knowledge, that's the thing. We could go on and on about loan programs. Knowledge. What about things like knowing what your closing costs are going to be, knowing what classifies as closing costs, knowing that when someone says closing costs, that might not be all the money that you need to bring to the closing table with the attorney at the end of the day, because there's other things involved, like your down payment, those closing costs we mentioned, and there's things called prepaid items, prepaid expenses. All of those things go into one bucket that's now called cash needed to close. So you have to be aware of that. Knowledge is the key. And one of the things that you can do to jumpstart yourself and your preparation for buying your first home is gain that knowledge. And I will tell you, I've got lots of knowledge up inside this head. I would love to share that knowledge with you. Reach out to me so that I can give that information to you. I would love to do it. There's no way that I can put it all in a video, but the old saying, been there, done that. Well, I've been there, done that, got the t-shirt. So through this video, I hope you have gathered some information. The two key ingredients for you are, one, being prepared. Know what your credit score is. Know what assets you have available. Know about your income. Just prepare yourself for that. Number two, knowledge. The more knowledge you have about the process, the better off you will be at the end of the day. We can take, as I mentioned in that just a moment ago, we can take anxiety from a 7 or an 8 and drop it to a 3 or a 2 or even a 1 just by helping you understand the process and being prepared for it. Those are the key here. I wish that I could share more information, but I would bore you with it. I encourage you to reach out to a mortgage professional. Hopefully it's me, the mortgage farmer, right here at Mortgage Choice, Cary, North Carolina. Look us up on Google. Look us up on YouTube. Look us up on the web. We've got a website. We've got great reviews. Look us up. I would love to share my knowledge with you and help you be an educated borrower, because as I said, knowledge is power. And the more knowledge you have, the more powerful you can be in your first mortgage transaction. I sure wish you would like that video, and I sure wish you would hit that subscribe button. We are growing this channel. I hope you find this information valuable. We look forward to sharing more information with you right here on The Mortgage Farmer.